Okay, so this video is all about the tariffs that Trump has just levied on other countries, and you're going to understand why we're looking at this Chinese guy with the fire in just a moment when we get to the end. Okay, let's start here. You know that Trump laid these tariffs, and then the Secretary of Treasury said, "Hey, just don't panic, don't reciprocate, and everything will be fine. This will be the high water mark." Well, Donald Trump just tweeted this out. China played it wrong. They panicked. The one thing they cannot afford to do. Well, what are we talking about? Mike McFaul explained there is nothing more naive than slapping new tariffs on countries and then expecting them to do nothing in response. Trump's bully ball diplomacy is not working. And it's not reciprocal tariffs either. That's really the trick here. He talked about it as if it's reciprocal. It's really like this punitive tariff for a trade imbalance. That's really what we're talking about. Okay, what he called this Liberation Day, the Economist magazine is calling Ruination Day. It's yet to be determined whether that's going to be fair, but the evidence isn't looking good at this point. This is an old tweet from J.D. Vance from 2017. Can't be repeated enough. If you're worried about America's economic interest, focus more on automation and education than trade protectionism, which is exactly what we're focused on, which is trade protectionism right now. The S&P 500 fell 6% on Friday. Friday alone, it fell 8+% over the course of the last couple of days, bringing its losses to the week to 9.1%. Stocks hadn't fallen this far, this fast since the early days of the coronavirus pandemic. It was the steepest weekly decline since March of 2020, and that's when COVID hit. To state the obvious, Michael McFaul says our president willfully and consciously triggered these losses. They were not the result of unintentional decisions or a virus. I hope Trump knows what he's doing. I fear he does not. Now, if you think that he's overstating his hand here and he's saying that President Trump willfully did this, I'm going to give you I'm going to give you the evidence from the other side that, yes, he is actually doing this. This is Bill Ackman. Bill Ackman's a CEO, and he's a Trump enthusiast, saying V.D. Hansen makes a compelling case for the Donald Trump tariff strategy, but gets one issue incorrect. He describes the Trump tariffs as reciprocal and proportional to those other nations have assessed on us. Now, if that was all that it was, that would be one thing, but that's not what it is. In actuality, the Trump tariffs were set at levels substantially above and in many cases at multiples of the counterparty country's tariff levels. Initially, the market responded favorably, up more than 1% when Trump referred to reciprocal tariffs in his Rose Garden speech. It was only when he put up a chart showing the actual tariffs that the markets plunged. Here's the thing, and he said it about 4 o'clock, and then it slightly went up, and then it plunged. And it plunged over the last week, 8.21% from the beginning of, Okay. So why did Trump take this approach? The answer goes back to the art of the deal. Trump's negotiating style is to ask for the moon and then settle somewhere in between. It's worked well for him in the past, so he's using the same approach here. The good news is that a number of countries have already approached this negotiating table to make tariff deals, which suggests that Trump's strategy is beginning to work. Whether this is enough to settle markets next week is unknowable, but we will soon find out. The market is simply responding to Trump's shock and awe negotiating strategy, factoring in some probability that it will fail or otherwise lead to an extended period of uncertainty that will sink us into a recession. Stocks of even the best companies are now trading at the cheapest valuations we have seen since COVID. Trump's strategy is not without risk, but I wouldn't bet against him. The more that markets support president and his strategy, the higher the probability that it succeeds. He thinks he's going to succeed. I don't know. It's a good question whether that strategy is going to work. It certainly is not a normal strategy.
Trump is crashing the stock market by 20% this month, but he's doing it on purpose. And this is why Warren Buffett just said Trump is making the best economic moves he's seen in over 50 years.
Stop. Let's look down below this. Berkshire Hathaway, and this is a reader's note, said that all reports circulating on social media sites, including X, TikTok, and Facebook, regarding comments allegedly made by Warren Buffett are false. Okay. Now, I'm not also going to correct all the other things. I'm just going to say this is what they're putting out there, or he's allowing to be out there. I don't know that this is actually any of this is actually true.
Now, here's the secret game he's playing, and it could make you rich. So why is he doing this? To push cash into treasuries, which forces the Fed to slash interest rates in May, and those lower rates give the Fed the ability to refinance trillions of debt very inexpensively.
Well, theoretically, that's possible. I don't know that he's meaning to do that, but I told you I wasn't going to comment, but I can't help myself.
It also weakens the dollar and drops mortgage rates. Now, it's a wild chess move, but it's working. Now, you're probably wondering, what about his tariffs? Well, I'll tell you, it's a genius play. It actually forces companies to build here to dodge them. It also
kind of, yes, but not exactly. And I'll show you in a moment.
Forces farmers to sell more of their products here in the U.S. to bring grocery prices way down.
That's like saying because you can't sell it over there, isn't it great that they're selling more here because they can't sell it elsewhere because of the.
We've already seen this with eggs. Now remember, 94% of all stocks are owned only by 8% of Americans. So Trump...
I don't know that figure is correct. That sounds very wrong. Or that's including all Americans, including children or something like that. That seems way too high.
He's taking from the rich short term and handing it to the middle class through lower prices.
Well, and the lower prices, so the last thing that you saw there was...
He's taking from the rich short term and handing it to the middle class through lower...
Yeah, see all this red, all that red's not good. And my 401k, just like many other people in the middle class, their 401k just took a beating, like to the tune of many thousands of dollars lost in the market. Okay, again, this was on Truth Social, but it wasn't created by Trump. It was just re-truthed, I guess is the term, by Trump on Truth Social. Okay, this is Dagan McDowell, a commentator from Fox Business, talking about, hey, this isn't going to work. Here's why. Listen to this.
BMW is going to rethink South Carolina because it's not going to import tariffed parts, engines from Germany, then to send those vehicles to export them. So
yeah, so we have in North Charleston, South Carolina, there's a BMW Daimler plant that builds vans. They kind of assemble them, uncouple them, send them to the United States, and then they assemble them here in order to have it be made in America to get around this. But they're not going to, be tariffed on those parts and still have the plant here. So that's kind of bizarre it's a lot of this is not going to work, but I don't think a lot of this, if Ackerman is correct, and I don't know that Ackerman is, Ackman, if Bill Ackman is correct, I don't know that the plan is to do that long term, but it's creating a lot of problems in the meantime. Okay. Much of this is predicated for those that think it's supposed to work on NAFTA. So manufacturing has been declining since the 1940s, early 1950s, and then it's just started declining. NAFTA came along in the early 90s, and then it was blamed for all the manufacturing leaving, but it wasn't the free trade of NAFTA that caused all the manufacturing to leave. It was already leaving. Okay. This is Senator Kennedy from Louisiana talking about maybe this isn't the greatest plan.
We're in uncharted waters. Tariffs are more art, in my opinion, than science. Tariffs are like whiskey. A little whiskey under the right circumstances can be refreshing. Too much whiskey under the wrong circumstances, and you end up drunk as a goat.
He's got away with words. I think that might be where we are. Robert Barnes says, you can't avoid an income tax. You can avoid a tariff. Just buy American. And Alex Tabarrok replied, he's a professor of economics at George Mason, said, I'm looking forward to buying all that American coffee, bananas, black pepper. By the way, your coffee price is going to go up. Just thought you should be aware of that. Okay, Thomas Sowell. Thomas Sowell is like the godfather of conservative, libertarian, but conservatives like him too. Economics. Oh my gosh, an utter disaster. I happen to believe that Smoot-Hawley tariffs had more to do with the setting off the Great Depression than in the 30s than the stock market crash. Unemployment never reached double digits. Like he's written like 50 books on economics, so I'm listening when he talks. Unemployment never reached double digits in any of the 12 months that followed the crash of October 1929, but hit double digits within 6 months of the passage of Smoot-Hawley and stayed there for a decade. That's a Smoot-Hawley tariff that was essentially protectionism. When you set off a trade war, like any other war, you have no idea how that's going to end. You're going to be blindsided by all kinds of consequences. You do not make America great again by raising the price to Americans, which is what a tariff does. So that's Thomas Sowell. And okay, I'm trying to show you multiple perspectives so that you can understand this. He's as conservative as somebody like McFaul might be liberal. Okay, here is Jim Cramer on CNBC, from CNBC, talking on CNN to
all right, this says Jim
his
Cramer,
former colleague
CNBC's
Aaron
Mad Money,
Burnett.
who has never been a free trader, right? So he's not just out here to go against them. He's saying the White House doesn't seem to understand what it's trying to do and that the reciprocal tariffs are not reciprocal.
That's right. That's what I've been saying. The reciprocal tariffs are not actually reciprocal. That's not what it is. It's something different.
And could do tremendous damage. So out front now, Jim Cramer of CNBC's Mad Money and Squawk on the Street, all on CNBC, that incredible network that I will love to the day I die.
She is formerly from that network, and now she's on CNN.
Here with you, Aaron.
So, and I'm so thrilled that we're able to talk. Okay, so what the heck is going on?
Well, I'm let down because I'm not a free trader. I'm a fair trader, always have been from the days when you worked with me at CNBC.
Yep.
And what I was hoping was that a coordinated thing where if you are charging us 20%, we charge you 20, instead of a car where we're only making you pay 2.5 and you're not letting us in. We try to get things better. But instead
on a specific thing, you go, if they're 10 on a car, you go 10 on a car.
But I went deep on the numbers today, and the numbers did not make any sense. And I was actually
I was doing like bananas in Vietnam. You did Cramerica.
Well, I just said, it's one of these things where if I'm doing 100 billion and you're letting me do 10 billion and I'm letting you do 100 billion, there was a way to be able to make it work. But the numbers that they did, and they had this ridiculous. I mean, that was the chart that they had with the mathematical equation. I mean, are you kidding me? How about just like
it looked like an Einstein?
I know. How about the fact that it was just wrong?
Yeah.
And what bothered me, Aaron, was that they really did over and over again. The president said, "Listen, it's going to be reciprocal. So you do it, we do it," and that was going to be so good. And I really believed in it. And I feel like a sucker tonight.
Yeah, and because he kept talking about how it's reciprocal tariffs and it's really not reciprocal tariffs. So I actually went to use some AI to run the numbers, and here's the kind of thing that we see when we run the numbers. So here you have the country, and the actual tariffs from China are 7.5%. The White House is saying that there is laying a 54%. That's 34% plus 20% existing, which is a 46% difference of tariff. But if it was reciprocal, truly reciprocal, it'd be 7.5. European Union, 3.5. It wouldn't be 20. It'd be 3.5. Vietnam, it would be 6.8. It would be 6.8 here. That would be the reciprocal rate. But what we're doing is calculating the trade imbalance. Like we sell you $100,000, or let's say $100 billion worth of stuff, and you only sell us 10 billion, and they're looking at the trade imbalance and trying to factor that in, and that's how they get these crazy numbers. So, and one of the things that happened, like Vietnam, 6.8% actual tariff. Okay, now to 46%. What's going to happen to your Nikes, which are likely made in Vietnam? Okay, that's where most of them are made, huge majority of them. So it's going to go up by about 40%. Does that make sense? I mean, this is crazy talk. And so Nike shoes, their stock just fell like a rock last week. Cambodia, 11, we're slapping 49, 35. Like every one of these categories go up. Now, if Ackman is right, what's actually happening is Trump is shooting for the moon, and maybe he'll get something and get some kind of deal of getting more things sold in those countries. But that's really a bizarre thing to go after rather than just having a simple trade. Like, I don't understand why the trade imbalance is that important. If you do, help me understand. Put that in the comments below. Here's Ann Applebaum as we wrap up. Financial Times is not mincing words. If it endures Donald Trump's decision on April 2nd, 2025 to enact sweeping reciprocal tariffs on U.S. trade partners, will go down as as one of the greatest acts of self-harm in American history. They will wreak untold damage on households, businesses, financial markets across the world, upending a global economic order that America benefited from and helped to create. So, okay, there's that perspective as well. For me, I can't see that this is a good thing. I'm a free marketer. I'm not even a fair marketer. Like, I don't even want to do reciprocal. I want to do free. I want everybody's to be free and reciprocally free. I mean, that's what I prefer. But this is not reciprocal. This is something other than that. Okay, we'll leave you with this image here, and this is a Chinese guy. He's going to light a candle. And you'll see him light the candle, and then you'll see him pour water in it. It's a pretty amazing stunt. Like, what kind of voodoo is he doing? Like, you see it with your own eyes. And this is a metaphor for what's actually happening here with the market. And he's holding up the candle, and then his wife gets ticked and turns it around, and you see the candles on the back end of the glass. And yeah, so I think that may be explanatory as a metaphor of what's going on. I'm not sure, but tell me what you think. Put it in the comments below. Thank you for the time, the likes, the shares, the subscribes. Thank you for your informing yourself. I really do appreciate that you're still listening to me. Thank you for being the kind of person that cares about the world and about Ukraine.